welcome to week 2. How did you find week 1? What did you get done? Did you get all of your tasks completed and your key results? Did you have a few that you were unable to get through or rolled over to this coming week? If you did, that's okay. This is a new process that no doubt you're having to adapt to and fit it into your very busy schedule, no doubt. The important thing to remember is that you shouldn't be spending any more than 5 to 6 hours per week on your property investment. And in fact, with the 6-week accelerator guide, it's been broken up into a way to just get you super targeted at the most pressing priorities, the things that you should be factoring in and you should be completing, as opposed to all of the peripheral noise of things that you could be doing but won't necessarily move you forward or move the needle to getting you closer to where you want to be, which is ultimately securing your next 6-figure profit real estate deal. And that's what we're here to do. So let me know how you're going. Let me know how week 1 was. It was just a real ease into it approach. Week 2, we now start to shift gears and really step up the activity in now finding our target locations. As you've probably heard me say, without target location research, you're really just shooting from the hip. It's really a scattergun approach, and it's what novice investors do. It's what the general investors do. They put the deal first and the location second, and what can happen over time is that they just end up overwhelmed, stressed, frustrated, exhausted, and that's because every time that a new deal comes across their desk, they're having to spend this crazy amount of time then researching the location as well. We try and flip that on its head in Viva and sort of say, well, if we start with the locations first and we kind of get our 3 pillars in place, then we can spend more time early days becoming an area expert. And when we start to feel like we really know the area well, like the back of our hand, it's then that we can start to look for deals in those markets. The very first few activities that we're going to do is just to validate that our chosen strategy is actually going to work in those markets and that they're actually going to be profitable. Once we've moved through those actions, then we can start to get into deal finding mode, and that's what we'll start to explore over the coming weeks. But first and foremost, what we're going to be looking at this week is really reviewing some of the modules, particularly around module 4 in looking for scorpions. This is where we start to uncover exercises like mapping, like legislation and reviewing planning documents, making sure that the areas and the regions that you're starting to focus on are in fact pro-development and they're productive and progressive areas that you do in fact want to be investing in. We don't want to be going to the areas that are living in the past, that are living in the history and that aren't open to and flexible to progression. It's often progression which makes an area attractive, that has high amenity and ultimately draws in buyers and tenants of property, which is where we start to see demand and ultimately price growth and price variance. We're also going to be running through the purchase price point exercise. So now, off the back of some of the work that you did last week in exploring what your available working equity looks like and also what your borrowing capacity looks like, now we can start to merge the two to establish what a price point looks like, because ultimately that's going to flow into your suburb location research and the activities that you'll do around that. We also want to do an exercise as well, which then validates that purchase price point by reverse engineering at a very broad and high level your chosen strategy, so that we can then have some conviction and confidence that just because we can borrow X amount of dollars or just because we have the available working equity, that doesn't necessarily mean that our borrowings and our combined with our available working equity creates a purchase price point that makes sense, because we also have to factor in things like holding costs and strategy costs and purchase costs and those sorts of things as well. And so we'll do that in the next key results. And then lastly, if you are looking to do a deal in a form of partnership, whether that be partnering up with an equity investor or a serviceability partner. Perhaps you are looking to do some form of joint venture or vendor finance deal. Well, this is where you really start to get into partnerships, and then you'll need to work through and strategize, well, what is it that I'm going to be focusing on? And how am I going to structure myself? And what does the timing look like of all of that? Because that's going to have to feed into your overarching strategy and location research. And you'll be able to do it in parallel as you're starting to work through the next few weeks as well. Now, don't forget that we want to see you submitting your weekly OKRs to the Viva team. And so you've got to do that by midnight on Sundays at the end of every single week. So send those to myself, mt@weareviva.community. Also copy in the support at weareviva.community so that we can see how you're tracking and how you're progressing. Importantly, what we do at the end of this week is that you and I have a personalized one-on-one check-in. And so on that check-in, we're going to be reviewing all of your target location research up to date. And so we're going to be working through a process of now condensing all of that down and shortlisting to your top 2 or 3 strategies, and then setting up week 3 so that you're going into week 3 with just absolute clarity. And we're also going to be troubleshooting anything that's come up in the first 2 weeks that you might be unsure about, or that you just need to discuss or just unpack in a little bit more detail. So there you have it. Looking forward to ripping into week 2. Go get it.